Hey traders, this is Blake Morrow with ForexAnalytix, and you're listening to the week ahead video for March 27, 2022. We have an exciting video for you today. But before I get into all that, let me mention a couple of things. First of all, if you have not registered for the Traders Summit live event next month, April 8th through 10th, you've got to register. It's free. Let me say that. It's free. We have so many great speakers, and it's going to be such a cool event. We haven't done it in about a year and a half or so. Seating is limited. Especially if you want to listen live, we can only have so many people listening live. So get registered right now. Click that register button. It's free. And even if you can't be there for the live, you'll get a recording after the fact. All right. We have a lot of great speakers, and we're actually adding a couple other speakers to this. And look at all of these market professionals, portfolio managers, analysts, economists. You're not going to want to miss this event. It's going to be a great event. So register for the tradersummit.net event. Next, if you guys haven't tried out ForexAnalytix, do so. It's only $1 for 10 days. You know why? You get the premium version. You know what's cool about that? Is you get the premium version, you get to try it out, and you get to try out all the functionality of ForexAnalytix for $1. Even if you decide to go with the light version, you still get to try the premium version for the next 10 days. So it's only $1. You know what else is cool about that? Is you can actually get the mobile app. Yeah, you can get the mobile app no matter if you're using an Apple phone or a Samsung device. Whatever device you're using, download the mobile app so you have all of our analysis, chat rooms, all of our updates right at your fingertips. And you know what else is cool about that? What else, Blake? Well, today you're going to actually get some analysis from Grega Horvat. He is our Elliott Wave analyst in the ForexAnalytix team. And it's one of the biggest strengths to ForexAnalytix is being able to see multiple styles of analysis in the markets. And getting Grega's point of view through Elliott Waves is awesome. So make sure you stick around for Grega. And I also have to say, guys, if you haven't checked out the Trader Funding Program, check it out. If you want to trade our money and not your own money, check it out. We do take an assessment fee. You have to pass an assessment, of course, to be able to qualify. But we have had a lot of traders already access live trading accounts, and depending on what account you try to qualify for, you're going to get ForexAnalytix for free for a certain period of time, because we want to be able to help foster some trading ideas while you're trying to trade. And we don't have a time limit for you to pass the assessment. And that's the difference between us and anybody else in the markets. So check it out. And if you want to know more information, there's a little video, 2-minute video at the very bottom, and you can find out more about the Trader Funding Program. So guys and gals, without further ado, I'm going to introduce Grega. Remember, next week's going to be a bit busy week with jobs report, end of fiscal year for Japan. The yen's been on fire, or a dumpster fire. And then we also have inflation data next week, GDP numbers out of the US and Canada. It's going to be a busy week. So Grega is going to take you all through that. Don't go anywhere. I'll see you soon.
Hello traders, hello everyone, my name is Grega Horvat, and today is my turn to give you this week ahead video update. But before we go to charts, I want to welcome you to this ForexAnalytix platform where we cover a lot of markets and analysis, and more importantly, we also have this trader funding program. So if you don't have access to big capital, but you can be profitable, then maybe this funding program could be the right for you. So you can find the link, I believe, below this video. Now let's go to the charts. Now firstly, I want to look right now at these emerging markets. We have seen that a lot of markets has recently, when I'm talking about stock markets, has recently turned very nicely to the upside. So emerging markets are also very important to give you the overall outlook, and it has a quite strong relationship to the US dollar. So what we see here from an Elliott wave perspective is obviously a very nice 5-wave recovery. It was an impulsive reaction, and the opposite reaction then should be a corrective movement. What we have seen is a very nice retracement for 61.8% back to the area of a former wave 4, and this so far has occurred with 7 swings. What I love so far is that in the last 2 weeks we have seen a very nice reversal here. So it looks like that we could be bottoming, and if that's going to be the case, then we should be aware of potentially maybe the dollar index could come a little bit down. Maybe not just here yet, I see room for 100 level, but the idea is that if this market will keep moving higher, I think that there will be stronger resistance on dollar index not far away. So if I give you here with let's say new price scale, okay, so here we have this US dollar in orange, and you can actually see that this US dollar obviously bottomed when this market topped, and we are still seeing US dollar doing quite well here and strong. But if these emerging markets and other stock market will keep moving higher away from these recent lows, then I think that resistance, as I said, on US dollar is not far away. So let's take a look firstly on US dollar index, and here what I'm looking at is still a very big triangle that I'm tracking here. So it's a ranged price action, that's why I'm tracking a triangle, because of these two contracting trend lines. But even if this is a triangle, it's still incomplete. So it's an A, B, C, D, E pattern, and you are now in a wave D. What you see here is that wave D can be in final stages, but as I said earlier, there is still room for 100 level. Okay, so looking at US dollar index, the intraday time frame here, I see ongoing consolidation, maybe already trying to break out here. So watch out next week for a final push to the upside. So if after this final push to the upside we will see stocks still very strong, and maybe even later on with acceleration, I think that US dollar index will later see a limited upside and actually a reversal to the downside. So when we are looking at the dollar index, we should not forget that this may not be the same for maybe for some commodity currencies. Keep in mind that US dollar index is the most linked obviously to euro. Okay, so the reason why US dollar index is still doing quite well, while you also have seen a rise on Aussie, well, it's because of the euro. So this very hawkish situation from the Fed, obviously they're going to do whatever it takes to fight this inflation, meaning the market expects that they will rise a few times still this year, and obviously this goes against the euro at the moment. So of course euro dollar could see much more weakness. So if we take a look at the euro dollar here, we are seeing here on where it is, just a second. Okay, so here on euro dollar we are seeing also very nice support not far away, but because of the intraday rise that is only in 3 waves, I think that there is room for more weakness here. So here is the 4-hour chart. I'm looking for ongoing 5-wave drop. Notice that the latest bounce, as I said, was made by 3 waves. We also see this broken trend line, so watch out for more weakness early this next week. But then be aware potential limited downside here, because we are going to track the final stages of this impulse that is in play since February. Okay. Also next week watch out for inflation data from Europe, and obviously jobs data will be also from the US, will be also very important for this pair. Now let's take a look also on dollar yen. Well, you can you know that US yields keep rising, and dollar yen obviously is trying to follow this market. Also we have Bank of Japan and Fed policy divergence, and this is what makes this pair very strong. We are seeing here on my primary account, we are seeing a massive break out of a triangle. Notice this monthly candlestick formation. It's very strong, so you definitely don't want to fight that, and I would not be surprised if we see a retest of these 2015 highs this year. Also looking at the weekly chart here, daily chart, we are breaking higher into a fifth wave, a very strong move. So it looks like it can be an extended wave here. So more upside after the next pullback. This is what I would be waiting for. If you are not involved in this market yet, then it's very hard to do anything at this price. You obviously want firstly to wait a pullback if you want to join the uptrend. Also, everyone sees the dollar yen went too far. Well, it's never too far for the market, okay? Also, keep in mind that we are seeing a very tight correlation with dollar yen and Nikkei, and we are seeing that Nikkei is still not breaking out yet, right? So here's the Nikkei. Notice that we are at this trend line right now. So after this trend line is broken, well, watch out for more upside. Of course, there will be a retracement probably on the way up, but just be aware that when we are going to see a breakout, this could easily send dollar yen, which is in blue, even higher, right? But ideally, as I said, we'll see some pullbacks to give a chance to ride this wave higher. Now let's take a look on cable. Now cable is probably in this corrective retracement from 2021 highs, still ongoing weakness. We could easily see move even back towards 61.8%, or maybe only to this former wave 4 swing low. So there's room for more weakness in my opinion. The reason, of course, is only 3 wave rise here on the intraday chart that stopped at these previous swing lows. So this proved to be a very nice and strong resistance. So I'm looking for more weakness, especially if we can break this trend line. Then I think that cable could be very quickly back at 1.3 level. So it looks like that this cable is also now coming to the downside due to not so aggressive Bank of England with this hawkish policy. So maybe this is the reason for resistance to stay in place here. And more importantly, I am expecting impulsive decline, the final stages of this higher degree correction. So once we are at the new lows, just be aware that again, sentiment could be changing down there. Okay, so for now, still cable, in my opinion, is bearish, at least for the short term. Now let's take a look on AUD. Now AUD is trading higher, but it's not really convincing. Okay, we are currently at this potential resistance, so we'll see what happens here next week, especially if stocks would also hit resistance. Then I think that this AUD could very quickly see a retracement here. Also, what concerns me about the AUD, if someone is bullish, is that I cannot really count this recovery from that January lows in 5 waves. It's a very overlapping structure. It could be maybe an ABCX, and now you are now in the second ABC seconds here, moving into this resistance. So this trend line could be very important. You also have, as I said, this wave X swing resistance. So maybe we'll see some pullback here. Even if just short term, I would be expecting a 3-wave drop before market may continue higher later. Also, let's keep an eye on copper. Notice that copper here moved to a new high and fell back into this range. So this usually suggests that market found a temporary top. Okay, it cleared a lot of stops at the new highs. Also, those who played on a breakout also were probably now found themselves on the wrong side of the market, because we are moving back to the downside. Even if this retracement from the highs is going to be just temporary, like in 3 waves, well, that's still only wave A. You are now in a wave B, meaning more weakness. And if we see more weakness here, I think that AUD could also see lower prices. Now let's take a look also on gold. Now gold, in my opinion, still unfortunately will stay in consolidation. Okay, it can be a triangle. Maybe some also see this formation as a double top. So it's definitely a strong resistance up there. Everyone expected a massive break above and out of this 2000 area, but unfortunately this is still not the case. We are seeing a temporary top here when looking at the lower time frame. So firstly, on a daily, as I said, maybe triangle is something that we should pay attention on. It's an ABCDE pattern, now still only in wave C, so this consolidation could take a while before we will see another breakout. So what I'm looking at the moment is tracking a 3 subwaves down for a wave C, okay, because wave C, if it's a triangle, should also be made by 3 waves. And looking at the 4-hour chart, well, notice that this was a very strong reversal, looks like an impulse. Okay, firstly, this was the broken trend line, then the second bigger trend line was also broken. So it appears that trend is changing currently to the downside. And if we think that this was the first impulse, well, then this impulse should be part of a higher degree 3-wave bearish structure. Because even if this would be a correction from 2070, you still need an ABC that will take prices to the downside a little bit lower, because corrections are made by minimum 3 waves, an ABC legs. So for now, what I see is wave B moving into very nice resistance. 38.2% is the first resistance. The second level is around 2000, obviously, where you will also see this trend line and the 61.8%. So I think that this is a very strong resistance area from where I would be expecting a reversal over into wave C. Now, very nice first support would be at 1880 level. Now let's take a look also on the S&P 500. Now the S&P 500 has made a very nice reversal. Also, it's breaking out, so I would not be surprised if we see more upside. Of course, I'm still open-minded here. If maybe suddenly we see a reversal, there can be a retest of 40,000 level. I was looking this to be a very nice and strong support. Also, it was minor swing low, as you can see here. So that would be the textbook support for this market, but unfortunately we have to respect what the market is doing. So we will see how this will unfold in the next few days. There's definitely a very strong resistance around 4600. Also, the rise for now is still only in 3 waves if you look from that February low, but more importantly, you have this 5-wave recovery underway now. Okay, so these 5 waves up, okay, suggest, even if just temporary, suggest that there should be some pullback. So the key support for the next potential bullish move would be at 4420. Okay, that was the previous highs here. So always when I'm looking for a break to a new high, well, we have passed these levels, then obviously this previous high should become a support. If not, if we suddenly see more weakness and break below that support, then I think that we will be headed back towards 4000. So for now, intraday trend is bullish for sure. It can remain bullish, but just be aware of this 3-wave pullback, which should later then stop at this support. If not, we are turning bearish again. Let's take a look now also on German DAX. Now, German DAX, and we can say the European markets obviously have seen a much larger drop because of the situation in Ukraine. So even this market is now trying to stabilize. So this is quite important for the overall view, because if markets in Europe are showing us potential, even if just short-term bottom, then I think that other markets will be also very attractive and potentially will move higher from here, because this DAX is probably in much bigger danger based on the situation in Ukraine. So if even this weak market is now trying to turn bullish, then this could be very interesting. In fact, you have these 5 waves up for this wave A. Okay, so that's the first impulse, and I will be expecting more upside after a pullback. So I'm looking for this ABC retracement that could be already underway. Watch out for first support around 14,000, and then you have at this previous swing low. So this is the 3,300 up to 3,500. That would be the second area of support. So definitely I will be looking for a bounce after this wave C will show up, ideally at the start of next week. Now let's take a look also on crude oil. Now crude oil, as you know, is making a very nice massive breakout, and I think that at some point we will retest these all-time highs here. For now that's still not the case, so I will be looking next retracement as a correction. Now on the intraday charts we have seen some very nice recovery here. I'm not sure if this is going to be wave A, you are now in a wave B and you are going to see limited upside for a wave C, or maybe the next break higher will be maybe even wave 3. In either case, I think that this current structure is the most important, because previously we had these 5 waves up and now market is just consolidating. So I think that this is an ABC formation, potentially a flat that will send us higher. Now, first support is around 107, the second is around 104, 105 level. Okay, so that's the area from where I would be expecting more upside, as I said, maybe just for a wave C, maybe even into a wave 3. But in either case, I think that next week we could see higher prices on crude oil. Now, if that would be the case, I would be looking then for more upside or for stronger Mexican peso. Now, I've been covering this dollar Mexican peso for a while, and it looks like that we are now dealing with the breakout point. Okay, notice that on a daily chart we previously had these 5 waves down, followed by a complex corrective recovery and another sharp reversal from that very strong resistance around 22, and we have seen another 3-wave rally. So always when you have this strong downtrend in 5 waves and then counter trends are made by 3 waves, then you know that market is forming a bearish continuation patterns. So since we have seen this market breaking the major trend line, so it's actually an extension of this triangle here, well, I think that more weakness could be seen very easily, very fast. We could be back at this 2020 2021 lows. Okay, also when looking at the 4-hour chart, notice that market is coming to the downside very impulsively, not in 5 waves yet, meaning more weakness should be seen after the next bounce. And ideally this will be a 4th wave. Now wave 3 maybe looking for a support, so resistance is at the previous swing lows here, and also watch out the 23 and 38.2%. Now these are the perfect fib levels for this next bounce to be limited for this wave 4. Okay, also of course traders, speculators are looking for more weakness here on dollar Mexican peso because of, as you know, inflation is also very high in Mexico, and they are already making higher rates, and obviously this is what makes this Mexican peso overall very interesting. Okay, traders, thank you very much for your attention. I hope that you enjoyed this video, and talk to you soon. Bye.
Hey traders, this is Blake Morrow with ForexAnalytix. Thanks for stopping by our YouTube channel. Don't forget to like these videos, share them, and subscribe to our channel so you don't miss any of the content that we provide here for free. Thanks for stopping by. I'll see you in the next video.